Hi, today we're gonna cover financial reporting analysis and reading 21 under study section 6, introduction of financial statements. So the role of financial statement is to provide summary of company's financial health, positions, and their overall financial standings. At least in US, as part of 10K and 10Q form, companies these statements are very useful from investors' point of view, so that they can analyze the company's past performance and can um, can estimate the future prospect of the company, so that they can invest accordingly and lend money to company accordingly, or they can engage in a financial transaction with the company. So there are multiple financial statements. The first and foremost, the most important one is the balance sheet. Balance sheet has two major, I would say, columns. One has assets listed in that column, and another has liabilities and equities there. So as shown is this financial equation here. Assets is always equal to liabilities plus equity. So in case we know, in exam they asked us to compute value of equity where assets and liabilities are given. So it's just a rearranging of this equation, we can find out the value of equity. For example, assets equal to liability plus equity. We know this is $1,000. Just for example, this is $500. So in case we want to know the equity, so it will just uh, straightforward rearranging the equation. Having said that, the other most important financial statement is income statement, and it's also called uh, statement of comprehensive income. So it has two components. One is the income statement, another is statement of other comprehensive income. So income statement is generally the operating revenue minus the operating expenses of the company. It has the transactions which are directly related to running the business and operations of the business, whereas the statement of other comprehensive incomes are the income or expenses which are not directly related to the operating the company. For example, there are some gains and losses in case of foreign currency translation or sale of assets which are really not related to the nature of the business. So under IFRS, income statement and other comprehensive statement can be combined in a single statement, and it's called statement of comprehensive income. Whereas GAAP also provide flexibility, and in GAAP they can firms can report other comprehensive income as part of shareholders equity. Statement of uh, changes in equity. Basically it's a it's a statement which depicts the change in equity, uh, how the income is affecting the equity, and dividend affecting the equity is shown here. Statement of cash flow generally show change in cash flow due to operating activity of business, uh, like or financial activity of business, like giving loan or borrowings or investing activity of activity of business. So it's also called cash flow from operation, cash flow from financing, and cash flow from investing activities. So beginning value of cash flow in balance sheet and end value of cash flow balance sheet for the next year. Change in the cash flow can be attributed to one of these categories of cash flow. Financial statement notes. So along with the statements, there are notes are also issued. It has the description about the physical period, accounting method used, like GAAP is used, or some other accounting methods is used in preparing the statements and disclosing them. Management's commentary and discussion analysis, it discusses the nature of the business, past performance, and future outlook. It's um, it's required under GAAP analysis under GAAP, but companies who report financial statements as part of IFRS, they do also release this MD&A. It highlights a trend and if and events that affects the company. Proxy statements are issued when shareholders vote is required, like election of a board member, compensation management qualification, or issue of a new stock option. So in those cases, proxy statements are also issued. Thank you.